Is the pathway to 75 basis points an easy one for the Fed to win?
Good morning, Manus. Great to be back. Well, it's very tough, actually. And let's split. The Fed first. Fed is on 75. However, it's not enough, in our opinion. They are still not reducing their balance sheets. They had set $47 billion a month, and then they were double it, but they haven't done any of this yet. These high interest rate hikes are not sufficient. If you look at financial markets, risky assets prices are still very high. This is loosening financial conditions rather than tightening them. So I think the Fed should do more to fight inflation. Inflation did drop slightly, but ex-energy, it did not. It actually increased. So they have to reduce their balance sheet. They have to do slightly more.
Well, what I would say back to you on that is that nobody is pricing in a more aggressive QT, nay bonds. I know bonds are down by 10 basis points this morning. Anybody's guess why. I mean, energy's lower. But I would say bonds, equities, and the dollar have not priced in a much more aggressive QT. Have we got the tolerance for an aggressive QT? What is aggressive QT? What do they need to do?
Aggressive QT is actually doing what they say they were going to do, which is reduce their balance sheets by $47 billion a month or double that. And they have not done so. So yes, risky assets are not pricing this because the Fed has showed that it is not doing it and maybe will not do it. So the Fed today is in a corner because more aggressive, given the geopolitics, this might create not a hard landing, but an actual crash. What we're seeing in Europe today is very, very concerning. In our opinion, what's happening in Europe is the worst energy crisis we have seen since the oil embargo of the 70s. This can get very, very ugly in Europe.
So it's not ugly enough yet for you in Europe. Tell me how ugly it gets.
Ugly is what we're seeing in the headlines, like yesterday, Switzerland saying, if you increase the temperature in your home by more than 19 degrees, they put you in jail. This is a headline yesterday from Switzerland. Ugly is when Germany has to reduce its electricity consumption by 25%, electricity produces by 46%. This is absolutely massive. This is disruptive.
What are we not pricing correctly? Because, okay, you can put me in jail if I turn my heater up too much the next time I'm up in Switzerland, okay? And there's going to be riots, people have said to me. So what is mispriced? The euro in terms of lower to go, 95, 96 bunds. Do I buy bunds and hide out in bunds? That's where I had a guest tell me yesterday. So if it's going to get more ugly in Europe, transcribe ugly to assets.
Assets is euro going potentially below 0.9. So we could see the lows of 0.8 handle.
So 80 to the dollar on euro dollar. When?
3 to 6 months. We could see that easily, I think.
So that's trash the euro. Where do I hide? Bunds, short end, or tens?
Probably tens, no, because this is an extended recession. I would more look at the short term, short end. This is a much safer bet. I would go to the US dollar. I would go to the Swiss franc, and I would go to more real hard assets.
Tell me this. What is the risk the ECB has a Trichet moment Mark II? Raises rates, 50, 75, I mean, split a hair, really. 75 basis points hike, and then has to very quickly U-turn, aka Trichet in the IF crisis. Is that a real risk?
Absolutely, absolutely. However, Trichet was not faced with the inflation that Europe is facing today.
No, he wasn't, but he saw the folly of his move and immediately backtracked. What is the risk of that, and what is the consequence of that on the currency?
Well, this could happen.
So it's a real risk?
Oh, yes, absolutely, absolutely. Today, Europe will face a recession, not might, will face a recession, one of the worst recessions it has faced. We are heading towards it, and I don't think risky assets are pricing it correctly. On the currency side, on the euro, it's a wild guess. Literally a wild guess today.
Okay, and to be fair, you did put a price. You did put a price down at 90, and I would imagine an outlandish call or a left tail risk call of 80. So let's just put a bit of context around it. But then transfer through that to asset allocation. I've got Goldman Sachs telling me buy value in America, and yet the Russell has collapsed by the longest run of losses since 2018. So I don't know whether they're just speaking their book. If you've got to have equity allocation, you probably do. Where is that?
It's very hard. It's a very small bucket, cherry-picked. I would go for small caps that are still growing, non-cyclical. It's a very, very, very small bucket again. 50% cash. I would look at the Swiss franc. I would look at specific currencies.
You have a portfolio with 50% cash in it at the moment.
Yes, absolutely. Today, yes.
50% cash, long Swiss.
Long Swiss, long private equity, and there are specific sophisticated strategies that are convex, specific to iTrax and CDX.
Okay.
These are synthetic protection instruments, yes.
Okay, my other sort of manic fascination at the moment is intervention in dollar yen, okay? And I like what Martin Malone sent to me when, you know, Kuroda, Sakibara was in charge, Kuroda was his deputy, and intervention only came when it came in size, it moved the market, not flipping around at the edges. G2 intervention, does it happen this year? And if so, by what kind of size, and can they move the yen? Can they halt the demise of the yen?
I couldn't say. I really couldn't say. There's so many wild cards happening at the moment. I couldn't give an opinion on that or give a forecast on that.